Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 9th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Here's the ES in a daily time frame. What you'll notice here is after price bounced off of our 1921s, we hit the new highs into 2007. That's the previous week's high now. Since then, we've kind of backed off quietly off that zone and are holding just above or at that 1981 half LVN. That CLVN is very minor now as we've continued to kind of push through and trade around that level. But overall, the expectation was that pullbacks into the pivot range should be defended for a shot at seeing another round of strength ahead. And right now, we're seeing a little bit of that, although we haven't really launched off that zone just yet. And we could see further push to the downside before that bounce actually happens. And what I mentioned before is watch the previous month's high here. After taking it bid and pushing through it, we have yet to retest that zone other than the day following the actual expansion day. So right here, 1968.75, any push into that zone could offer the best opportunity to defend for a shot at reaching the primary bull target for the week, which is currently 2040, but with the new lows, that would come down just a little bit to meet a little bit lower. So we'll see how that plays out. I think the early key level to watch here is going to be the previous week's close, 1995s right now. That level went off of the previous session, and that's the current highs. Defenses at that area could lead to a push into 1968, so we could see short-term weakness before we see the swing move higher. So looking at the intraday time frame, here's what I'm talking about. If I bring up the previous week's close here, 1995, 1994.75, you can see how that area has been offered so far in overnight trading and the previous session as well. So it went offered here, pullbacks to that zone generally defended, and now we're seeing a push into that area also defended here heading into the RT8 session. So this is going to be an important zone right here that bears want to continue to defend for a shot at seeing new lows below. So a defense off of the previous week's close here would suggest a push into the primary bear target at 1971.75. There's also a key level at 70 and the previous month's high at 68. So right now, that's kind of the primary bear play, is to defend the previous week's close for a shot at seeing a move into this zone later on in the session. Any squeeze above 94s opens up a retest back at 2007, the previous week's high. All right, let's take a look now at crude oil. Looking at crude oil in the higher time frame, what you'll notice here is we actually had a big time rollback day the previous session here, where price basically pushed beyond the previous session's high, rejected on a double top here pre-market, and then saw a significant sell-off back toward the previous session's low. So that was a huge rollback day where price just kind of pushed back. Now what you're seeing is a little bit of overnight strength and holding back above 37s, which was a key level for us. Right now, what I mentioned with crude oil, we had such a significant squeeze here that any pullback should still be considered a buying opportunity, perhaps even into the previous month's high at 35.81, or perhaps as low as 35.25, the key level, or 34.63. So we don't know how far this pullback can be, and the pullback can get a little hairy. We saw that kind of play out here after we saw the initial squeeze. We saw this thing kind of pull back, get hairy, and then launch. The same type of thing could happen. And so we're watching to see how this thing plays out once it does see a pullback, or should it see a pullback, because I believe still that any pullback could be a buying opportunity for a push into 39.17s, which is the next HVN above. After taking composite VPOC bid, the expectation would be for price to either create new value at higher price levels or retest previous value, and that's going to be 39.17. Obviously, we have the top of the key range here at 40.5. That was the initial major secondary target. After we rejected off the lows, the expectation was for a move into the midpoint of the range at 34.63, followed by the potential to see a move across the range into 40.5. That continues to play out. So pullbacks should continue to be defended. We have a bit of an LVN here at 36s into 35.81. That's probably the first zone to watch for a potential short squeeze higher. Otherwise, a failure to hold above 36s could open up a retest back at the midpoint of the range at 34.63, which will be important for bulls to defend. So taking a look at the intraday time frame right now, what you'll notice is the previous evening here, when I talked about the closing report, I talked about how price held or closed right at the previous week's high. And I mentioned a defense at that zone could offer a retest back at the 25% weekly key level. That's the R1 pivot boss pivot there. And we got that move overnight. And now at any time you see a rejection here, like we did, double top here at the 50% rejection level, we went offered through 25 and back into the previous close. This bounce into 25 generally will want to be defended by bears for a shot at seeing a push back downward. A push back above that level would open up a retest at 37.90. So right now, bears are expected to defend 37.27, at least short term, for a retest back toward overnight lows or perhaps the previous session's close. And any failure to do so will open up a move back across the range into 37.80. All right, let's take a look now at the gold futures contract. The previous evening here, what I mentioned after the market closed was basically that 1272.40 was our new focus and how prices were being rejected above that level. And the implication was that if we couldn't hold above 1272.40, the expectation would be for price to move back to a composite VPOC at 1233.30. And I mentioned that we could be looking at a 30 handle decline ahead. And so far we've seen overnight weakness after failing to hold above the 1263.90 level, which is the top of the key range. Failing to hold above that level not only opens up a move back into the midpoint of the range, but could also move price across the range into the bottom, which right now is 1191.5. So this could be the beginning of a larger pullback. Obviously, in an uptrending market, pullbacks into the pivot range are typically defended. Additionally, something to keep in mind is that the trigger zone here between the first and second pivot-based EMA has been defended this entire way up in gold, all the way up. So right now we are back into that zone. So if this thing doesn't materialize below, I would say the 1248s, then you're likely going to see this thing defended and attempt another squeeze up. So don't fall in love with the short side, because this has been a very bullish commodity here throughout the beginning of the year, and has a very quick tendency to squeeze bears out of this thing. Short term, any failure to hold above 63s, 64s in general, opens up a potential test of 1233s. But should that play out, expect bulls to come back in and defend for another attempt at higher highs. So right now, short-term implications is 1233. Failure to hold 64s here squeezes back up. Okay, taking a look at the NQ now. Here's the NQ in a daily time frame. This one has attempted to hold above the top of its key range, which is 43.09 quarter. Failing to hold above that level and then seeing a push below it in the previous session. That's short-term bearish and could open up a retest back at 42.26 with a shot at even perhaps rotating all the way back down into 40.85, the midpoint of the range. Because if price cannot hold above the top of that key range, the expectation would be at least a return back to the midpoint of that range. We obviously have a lot of confluence here at 41.97, 4,200 in general. 42.26 is an important CLVN there and the midpoint of the August range. So short term, any failure to get back above 43.09 opens up a move into 42.26. That would be the first area to consider as a solid swing buying opportunity. Short term in 42.26 at that CLVN. Any push back above 43.09 opens up a potential squeeze back into our primary overall swing direction, which is that HVN above at about 4400 to 4410. So looking at the intraday time frame, right now what you see is 5-day VPOC being defended and offered. So we had a go offered here, price attempted to hold above value, offered again, pullbacks to that zone, especially after the shift downward were also defended. So this is an important zone, 43.11 half, 43.09. This area is being defended by bears for a shot at new lows. That's the current primary idea, short term. Above 43.11 half opens up a return back toward recent highs at 43.55. So right now with bears defending 4300, 43.11, that zone, the expectation would be for a move into the primary bear target at 43.38 on a day basis and into 42.26. Remember, 42.26, major key level on a higher time frame. That level, if tested today, could offer a first test buy opportunity, at least back toward 42.60 with a shot at seeing a move into 5-day VPOC at 43.01 quarter. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck. and trade well.